Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So, do you have a sad Bitcoin story? I do. I think a lot of people do. You're starting to hear them come out with the recent big rally in Bitcoin. So my story is somewhere in 2016, I think it was, a guy that I was doing work for paid me a bonus in Bitcoin. It was 1 Bitcoin to be exact. And at the time, it was worth somewhere in the $400 to $450 per Bitcoin range. So I got this Bitcoin. I didn't know a whole lot about it. I mean, I was somewhat aware of the whole crypto phenomenon and whatnot, but really, I needed a laptop. So I found a used laptop that would do the job for about $350. So I cashed out my Bitcoin bonus and I bought the laptop. And of course, that left just a fraction of 1 Bitcoin. And honestly, I kind of forgot that I even had any left until the first big run up to nearly $20,000, which was in 2017. And when I got into my wallet to check the value of the Bitcoin that I had left, I was thrilled to learn that it was worth about $3,000. Now, as you probably remember, Bitcoin didn't stay at $20,000 very long with that first bull run. And when it started to go down, I cashed most of it out. I think it was somewhere in the 13 to 14,000 range when I cashed in most of what was left. I kept a very little bit. Now, it's really hard to retell that story and think about that now that Bitcoin has actually eclipsed $100,000. I know it's a little bit below that now, but still, you think about that. I had that Bitcoin if I had just held on to it. Coulda, shoulda, woulda, right? So Bitcoin has surged from $69,363 before the election to over $100,000 in the wake of the election. I think it topped out around $103,000 before it gave up some of those gains. With this massive bull run, the spotlight is once again shining bright on the cryptocurrency. And I'm starting to even hear people talking about the possibility that Bitcoin could replace gold as a reserve asset for central banks. Now, I don't have a crystal ball, and I can certainly understand that speculation. I wouldn't rule it out completely, but I don't personally think it's very likely. A friend of mine made a really good point. People saying things or posting things on X or, getting on some show and talking doesn't actually translate to companies and countries lining up to stockpile Bitcoin. In fact, yesterday, Microsoft shareholders voted not to hold cryptocurrency on its balance sheet. And it actually triggered a little bit of a sell-off. There was actually a big drop on Monday with Bitcoin falling to 94,100 before it recovered to 97,800. The drop contributed to, get this, $1.5 billion in liquidations. Now, nobody's really sure what sparked the sell-off on Monday. And again, we had a little bit of a sell-off on Tuesday as well after that Microsoft news came out. Now, according to a Yahoo Finance report, there are several possibilities, including Bitcoin transfers that originated from Bhutan and the release of Google's Willow quantum computing chip, which has reignited some discussion about the long-term implications of quantum technology on blockchain security. But regardless, the sell-off and this big up and down underscores one of the key issues with Bitcoin. It is extremely volatile. Now, I'll grant you, it's not nearly as volatile as it was a couple of years ago. That volatility is starting to come down as the market matures. But still, in general, compared to a lot of assets, the price fluctuations in Bitcoin are extremely volatile. And, here's the thing. I know a lot of precious metals people, maybe not a lot, but, well, I don't know. A lot of people I know that are in the precious metal circuits are very anti-crypto. And I'm not. I want to make that clear up front. I like any kind of monetary competition. And I think it is good and important that Bitcoin is out there in the marketplace. I think it's an overall positive in terms of, the world of money. But that being said, I'm also very wary of people who are all Bitcoin all the time. I've heard of people putting their entire savings into Bitcoin, and I think that has accelerated with this recent, huge run up since the presidential election. And I don't think that's wise. I'll be honest with you, I would never put all of my savings in anything. I'm a big proponent of diversification and hedging. And, there are some other fundamental things about just crypto in general that I'm kind of wary of. And, maybe this is a sign of my cantankerous old age, but I really want money I can physically hold in my hand. At least some of it, right? Like, obviously, I have a checking account and I use debit cards, etc. But I also have some cash because I want to have money that I can hold in my hand. Now, I love the fact that Bitcoin is decentralized, and I love the fact that no one person can control it. But the fact that it is entirely internet-based is problematic to me, right? Nobody can control a decentralized system, that's true, but governments can certainly control the internet. And we've seen in some of these countries where there's been intense civil unrest where basically the government just shuts down access to the internet. So it is possible. And the other issue is that Bitcoin needs electricity, right? Turn off the power and you got no Bitcoins. And again, this is really more of a problem, I guess, in a kind of a doomsday scenario, an apocalyptic kind of thing, but not out of the realm of possibility. And, I live here in Florida. We just had 2 hurricanes. There were people that were out of power for, a couple of weeks. That gets problematic when all of your money is in an electronic form. And I guess really, to be accurate, I should say that you don't have access to your Bitcoins if there's no internet or electricity. You still have them, but you can't access them or use them. So again, this is why Bitcoin isn't a great solution for some kind of doomsday scenario. I want hard currency like silver that I know I can use in barter, that I can find somebody who's going to take it, and it doesn't matter what's going on with the power grid or the internet. But all of that said, I'm definitely not one of those guys who constantly downplays Bitcoin. And, the fact that I'd have almost $100,000 right now if I hadn't cashed out in 2017 reveals that it has been a very good investment over the long haul. It has undeniably done well. Now, I think it's important to remember with any type of investment, any type of asset, how good it is really depends on when you get in and out, right? Somebody who bought at 103 right now might be thinking, oh my gosh, I've lost this money. It's only 96 now. But that being said, as long as you don't cash it out, you haven't lost anything, right? You don't win or lose until you either spend it or liquidate it. So anyway, with the recent price surge, I'm starting to hear this kind of dialogue and this mantra that Bitcoin is digital gold. And, I heard this a lot during the last big bull run. And in fact, Federal Reserve Chairman Jerome Powell recently tried to lump Bitcoin and gold together. And I want to take a little bit of time to dissect what he said, because I think it's revealing on a lot of levels. And I'm going to give you the bottom line first. Gold and Bitcoin are not the same. They are different assets. Bitcoin is not gold. It doesn't function in the same way as gold. It doesn't move in the same way as gold. It's not the same market as gold. Now, there's certainly crossovers. If you put a Venn diagram up, there will be some shaded areas of commonality, but they are not the same. So here's what went down with Powell. During a recent interview, the Fed chairman said that Bitcoin is, quote, just like gold, and it is not competing with the US dollar. And he said all this during the New York Times Deal Book Summit. And during this summit, he was doing this on-stage interview kind of thing. And the interviewer asked him if he thought the recent surge in the price of Bitcoin represented a loss of faith in the US dollar and the Federal Reserve System more generally. Now, if you're going to ask me that question, I would say, yeah, at least partially. I think a lot of people who hold Bitcoin, who are pro-Bitcoin, understand the problems with the dollar. They understand that the dollar is being intentionally devalued and depreciated. So in that sense, I think that the correct answer to this question is yes. But of course, Powell answered, I don't think that's how people think about it. Now, he's probably right. Like if you ask a mainstream guy on MSNBC that question, he probably doesn't think about it that way. If you ask your average person on the street, I don't think that people have really lost faith in the US dollar, mainly because they don't understand it. Now, what they do understand is that inflation is killing them. They do understand that their dollar buys less and less and less, but they don't understand really that it's a problem with the entire system because they've been brainwashed, right? A lot of people think that, inflation was caused by Putin's price hikes or, it's greedy corporations or all of this BS that gets thrown out there to obscure the fact that inflation and the devaluation of our money is because of the government. The government is doing it, and they're doing it on purpose. But anyway, Powell says that's not how he thinks other people are thinking about it. And he went on and he emphasized that people use Bitcoin as a, quote, speculative asset. And then he went on to assert that the cryptocurrency, again, I've said this once, but he said that it is just like gold, only virtual. He said people are not using it as a form of payment or a store of value. It is highly volatile. And he emphasized it is not a competitor for the dollar. It's really a competitor for gold, he said. That's how I think about it. So for some perspective as we get into this discussion, Bitcoin is up 133.87% this year. It has a market capitalization of about $1.92 trillion. And interestingly, Bitcoin has surpassed silver as the 8th most valuable asset in the world, with a market value of $1.75 trillion. Pretty impressive. Gold has also had a strong year, obviously not nearly as strong as Bitcoin. But despite the sell-off with the Trump shock, as I like to call it, it's still up over 28% on the year. And when you look at market capitalization, Bitcoin is still far behind gold. Gold has a market value of nearly $18 trillion. So over 9 times a bigger market than there is for Bitcoin. So that just kind of gives you an idea. Both assets are doing very well. Both assets are very prominent. And so, just looking at that, you can see that there is some similarity. You can understand why there might be some comparison. So let's break down what Powell said, and let's see how his comments stack up against reality. Now, I will give him this. He is correct in that Bitcoin behaves more like a speculative asset than it does a currency. And when you look at what Bitcoin tends to correlate with, it actually correlates most closely with tech stocks. Tech stocks are known to be kind of risk on. Tech stocks are known to be relatively volatile. And tech stocks have done extremely well over the last couple of years. And when you think about it, it kind of makes sense, right? Bitcoin is built on blockchain. It's an emerging technology. It's connected to the internet and computers, so you could see where there would be that association just on the surface. So Powell's right about that. Powell is also correct to note the volatility of Bitcoin. While the price of Bitcoin has been generally upward over time, it does tend to be extremely volatile in the short term. So how volatile? Well, since its inception, Bitcoin's price has experienced dramatic swings. Starting at fractions of a cent, Bitcoin reached $1,000 for the first time in 2013. And that kind of signaled, hey, this has some potential as a financial tool. However, this milestone was followed by a sharp correction. And then by 2017, Bitcoin had surged to nearly $20,000. That's when Mike sold his. And at that point, it started to attract both institutional and retail investors. But again, we had a big correction. It was followed by a dip to 3,200 in 2018, so a huge sell-off. Then in 2021, Bitcoin soared past $60,000, and this was driven by a lot of macroeconomic factors like inflation. Institutional adoption was picking up, and so we had this big surge, and then it dipped again, almost halved back into the 30,000s. And of course, then Bitcoin climbed back to 60,000, and we've had the most recent run where we've seen it over $100,000 per Bitcoin. So all of this underscores the fact that it is extremely volatile. And that's really the point that I'm trying to make here. Bitcoin's annualized volatility was approximately 81% in 2021. And as I've already mentioned, that volatility has decreased modestly as the market has matured, as more institutions have adopted it. And recent data indicates that Bitcoin's 30-day annualized volatility has remained below 80% throughout 2024. But even at that, it's still an extremely volatile asset. So it's important to kind of keep that backdrop in your head as we consider the question, is Bitcoin just like gold? Because that's what Powell said, right? And the simple answer is no, it's not. In fact, when you think about what Powell said, his logic is internally incoherent. Because remember, he said Bitcoin is a speculative asset. He said it is not being used as a store of wealth, and it's not being used as a transactional currency. It is a speculative asset. Gold is definitely not a speculative asset. Nobody would tell you that it is. In fact, some people will argue it's not even really an investment per se, because you're typically not going to get big returns on gold over time. That's why gold tends to run into headwinds whenever the interest rates go up, because interest-bearing assets, bonds and whatnot, will provide more income when interest rates are high because of the yields. Now, at times, if you play the market swings the right way, you can get a good return on gold. And I think a time is coming in the relatively near future when the economy explodes and when it becomes absolutely clear that inflation is alive and well, that you're going to see this big jump in the price of gold. And you may make some real gains in that scenario. But typically, in just your average investment strategy, gold is your wealth preservation. It is your inflation hedge. It is your safe haven. People aren't running to gold to speculate on its prices. That's just not how it is generally viewed out there in the marketplace. So you can argue, looking at Bitcoin, you can argue that it is a store of value. And I think a lot of people recognize it in that way. It's kind of interesting because in the early days of Bitcoin, I was really excited about it because of its potential as a transactional currency. Like, I was really interested in Bitcoin long before anybody was talking about investing in it to make money, right? I thought this is a fantastic way to transact business and bypass dollars. It is a sound money in a sense, and primarily because there's no central bank that can inflate it, right? You're not going to see Bitcoin devalue simply because there's more and more Bitcoins. It is built on an algorithm, and you only get so many Bitcoins in a certain amount of time, and eventually you're not going to get any more. And this is something that is completely different from fiat money. So I love the concept of cryptocurrency as a transactional currency that can compete with Federal Reserve notes. But that's not really how it has evolved in the marketplace. I think Powell is right in that it is viewed by most people as a speculative asset. They're buying it and they're hoping it's going to appreciate and they're going to make a lot of money. It's going to make them rich, right? They're speculating that it's going to go up and it's going to make them rich. But because Bitcoin is not subject to government monetary manipulation, it certainly has some characteristics that make it an inflation hedge. And I think a lot of people who really understand what is going on with our money, that understand the difference between fiat and sound money, I do think they're looking at it as an inflation hedge and a store of value. So, it's not unreasonable to view Bitcoin as a way to preserve wealth as the dollar appreciates or depreciates. But even if we do view Bitcoin as a store of value, again, it's a very, very volatile one, right? And it is not historically served as a good safe haven, not at all. For instance, Bitcoin completely failed as a safe haven hedge when the markets tanked back in 2018. During that time period, Bitcoin correlated more closely with other risk assets. Its performance was down through that time period on par with tech stocks. In fact, it fell 55% in the fourth quarter of 2018, right along with the stock market. Meanwhile, gold was up significantly during that same time period. So the point I'm making here is they are not the same. Gold and Bitcoin are not the same. The fact of the matter is gold and Bitcoin don't tend to correlate at all over the long term. A Bloomberg report noted the average long-term correlation between gold and Bitcoin has been close to zero, which makes both together additive to multi-asset portfolios. In other words, again, I want to drive this point home. Bitcoin and gold aren't the same. They're different assets, and they can both benefit and boost a diversified portfolio. And this has always been my mindset. There seems to be this either or mentality with a lot of people when it comes to gold and Bitcoin. You've got people in the precious metals worlds that are like, Bitcoin is awful, never buy Bitcoin, it's going to zero. Bitcoin, boo. And then you've got people in the Bitcoin world that are like, oh, gold is a relic and nobody wants gold but old men and nobody needs gold. Hey, Bitcoin is digital gold. And, it's always one or the other. And I'm like, hey, why not both? There's no reason to not take advantage of the benefits both of these assets bring to the table. Anyway, as I said, Powell's statements are internally incoherent. And you just have to think very carefully about what he said, right? He lumped gold and Bitcoin together to argue that neither competes with the dollar. That was really the thrust of his point. Gold and Bitcoin are the same, and neither one are competing with the dollar because the dollar is great, I guess. But gold is clearly a competitor with the greenback, right? Because it's money. And I don't think that's even debatable. So that being the case, gold is undeniably competing with the dollar. That means insofar as Bitcoin and gold are the same, then Bitcoin has to be competing with the dollar as well. So let's talk about gold for just a minute, right? Gold is money. It has served as money for over 5,000 years. And even Investopedia characterizes gold as a currency. So I'm going to read what it says because I think this is an interesting point. And this is coming from, a very mainstream point of view. Investopedia says, quote, under a free market system, gold is a currency. Gold has a price, and that price will fluctuate relative to other forms of exchange, such as the US dollar, the euro, and the Japanese yen. Gold can be bought and stored, but it is not usually directly used as a method of payment. However, it is highly liquid and can be converted to cash in almost any currency with relative ease. So the Investopedia article kind of hints at one of the biggest stumbling blocks for gold being used as money in everyday transactions. And that's the fact that because it's so expensive in dollar terms, it's difficult to do daily transactions with it, right? You don't want to make a small transaction without an ounce of gold. However, with the advent of electronic payment systems that can move gold and silver digitally without ever removing them from a vault, it has become much easier to use gold in small transactions. And if we can lower some of the tax and regulatory barriers, gold could easily serve as money in everyday transactions right now. I mean, even without the electronic aspect, transactional gold currencies such as goldbacks, which are basically real thinly produced laminated gold in fractions of an ounce, then it can be used in everyday transactions. And if you're interested in goldbacks, we actually sell them at Money Metals. So it's just really a matter of human action. If people want to use gold and silver in transactions, they can do it. Now, granted, there are a lot of legal and regulatory and tax hurdles that kind of make that more difficult, which I think is on purpose. But, we're starting to see some states try to lower these costs. And I think that as that happens, it's going to be even more feasible for people to transact business using precious metals, using sound money. Anyway, my point with that is that gold is a currency, and that means it's competing with the dollar. And it's winning against the dollar, as evidenced by its constant appreciation in dollar terms. That's why we call gold an inflation hedge, because as dollars devalue, gold stays the same. The price of gold goes up, reflecting the devaluation of the dollar. That's why gold is an inflation hedge. And, here's another thing. The fact that gold is money is evidenced by the fact that central banks are aggressively increasing the amount of gold they hold in reserves. Year to date, central banks have bought a net 694 tons of gold, and that's only what's being officially reported. Over the last 12 months, officially, central banks have increased gold holdings by an average of 26 tons per month. Meanwhile, the number of dollars held in central bank reserves continues to decline. It's fallen 14% since 2002. Now, the dollar is not in any danger of suddenly becoming not the reserve currency tomorrow. Gold's not going to replace the dollar as a reserve currency anytime soon. But you see this shift. You see this competition with gold winning and the dollar losing because everybody's looking at the dollars and they're looking at the way they're depreciating and they're looking at the way the federal government and the central bank keep creating more and more of them. They look at the inflation problem and they're like, why would we hold dollars? And then you add on top of that the political aspect where you've got the U.S. government weaponizing the dollar and using it as a foreign policy billy club. Well, why would you subject yourself to that and hold dollars when you have other alternatives? So the dollar has a lot of problems. And then you've got the national debt, the irresponsible spending, the fact that the federal government keeps borrowing and borrowing and borrowing and borrowing. And at some point, the world's going to go, you know what, we have enough US dollars in US debt. Let's have something that is a little bit more stable. Hey, maybe gold. So when you realize that gold is literally replacing dollars as a reserve asset, well, if that's not competition, well, I don't really know what is. And as I've already mentioned, Bitcoin is similar to gold in at least one sense. It can also function as money, right? It has a price. It can be quickly converted to other currencies. It can also be used directly in transactions, although its volatility and transaction costs have limited its use in that capacity. That could change. And both Bitcoin and gold have another similarity that makes them both superior to government fiat money. They can't be printed by the central bank. And this is key, right? The Federal Reserve can create new dollars at will. The money creation, which is inflation, it supports the U.S. government's prolific borrowing and spending. I say this all the time. The Federal Reserve is the engine that drives the massive federal government. If you didn't have the Fed backstopping the borrowing with money creation, you wouldn't have the massive warfare and welfare state that you have today. The constant money printing is necessary to sustain government spending, and this is precisely why the dollar continues to lose purchasing power month after month after month. This would be impossible with both gold and Bitcoin. Right? The creation of new Bitcoin is limited by its algorithm. And of course, the creation of gold is limited by nature. The restraint that gold put on money creation was precisely why the U.S. government went off the gold standard. And this is also a reason why when you hear people talking about, oh, we're going to replace the dollar with Bitcoin, I doubt it, because the government doesn't want something that it can't create and control, for the reasons that I've just explained. So when you boil it all down, Powell is wrong on both counts. Gold and Bitcoin aren't the same, but insofar as they are similar, they are both competing with the dollar. And given the superiority of both Bitcoin and gold as money, it's no wonder that Powell wants to downplay this competition. Now, will Bitcoin replace gold? I mean, I guess it could, but a lot would have to change, right? I'm not holding my breath. But I do think it's fair to say that both are superior to the dollar, and it's not a bad idea to hold both. So as I mentioned a couple of weeks ago on the show, and I think this bears repeating, especially in context with this conversation, there's a strategy that's worth considering when it comes to Bitcoin, and that's holding your Bitcoin gains in gold and silver to help mitigate Bitcoin's volatility. Right? Now, you'll have to carefully consider when to get in and out of Bitcoin, but if you decide to get out, if it looks like we're going to have another big correction, you get out, you can put your gains in precious metals, and then you could use those precious metals and convert them back to Bitcoin at the bottom. And by doing that, you would avoid the inflationary bite you're going to get if you sell your Bitcoin and hold all of your gains for dollars. Now, I know there's a lot of people out there in the Bitcoin community who are very much, I mentioned this term earlier, hold on for dear life. And they're not selling that Bitcoin for anything. But it might not be a bad investment strategy if you feel like you're pretty good at timing markets to get out of Bitcoin at the top, put that money into precious metals, and then hold the precious metals until you see Bitcoin starting to go up again. Then you buy back into Bitcoin, by liquidating your precious metals. And you can play that back and forth. If you are inclined to try to mitigate those losses and kind of play it that way, you definitely don't want to hold your Bitcoin gains in dollars because you're going to get eaten up by inflation. So it's just a strategy idea. And if you are interested in that, just keep in mind that Money Metals was one of the first bullion dealers to accept Bitcoin. They started accepting it as payment back in 2013. And since then, the company has expanded its services. It facilitates both buying and selling transactions in cryptocurrencies using a platform called BitPay. And Money Metals can actually make payments to clients using a variety of cryptocurrencies, and then we can purchase your metals and send you the digital coin of your choice as payment. So this transaction can be done directly on the moneymetals.com website or over the phone. And Money Metals customers can also swap Bitcoin and other crypto coins as well for gold and silver, store them in the Money Metals depository. And when you store with us, it makes it quicker to move back into cryptocurrency when the time comes and to avoid the cost and hassle associated with shipping metals. So just something to think about if you're interested in kind of playing this. And, there's good strategies even using just gold and silver. You can buy silver low, sell silver high, and because silver is volatile, you can expect that it may drop again, but you can put your silver gains and then transfer them back into gold to hold those gains better. So there's a lot of strategies that can be used. What I would do if I were you is just call Money Metals, 800-800-1865. You can talk to a precious metals specialist, and they can explain the nuts and bolts of this probably much better than I just did. And these folks are fantastic. And you want to make this call whether you're interested in cryptocurrency or not. The recent correction in gold and silver, I think, has created a buying opportunity. And it looks like we may be starting to kind of rally back. Yesterday on Tuesday, gold closed above $2,700 an ounce. We saw silver back over $32 an ounce. We've got a Fed meeting coming up and some inflation data coming out actually today. So we may have a good buying opportunity right now before we start seeing gold rally again. And I've talked before about the reasons that I'm still bullish on both gold and silver moving forward, mainly because I'm absolutely convinced that inflation is not dead, and that despite that fact, the Fed is going to have to continue loosening monetary policy because of all of the debt and because something is bound to break in the economy. So anyway, make that call today, 800-800-1865. Talk to a Money Metals precious metals specialist. If you don't want to talk on the phone, you can go to moneymetals.com, chat with a precious metals specialist online. And again, you can make transactions directly on the website without talking to anybody. But, now's the time to do it. Don't put it off. And we've got the holiday season. We've got Christmas, Hanukkah. Holidays are coming up. Gold and silver make absolutely fantastic gifts. We've got all kinds of things that, if you want to buy Mike Maharrey a present, go to moneymetals.com and find me some gold or silver. I would be happy to have it. So it's a great gift-giving opportunity. So make that call today. So all of that being said, we're going to call this a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today, and of course a lot more, over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, you'll want to sign up and get on our email list if you haven't done that already. And of course, you can subscribe to the Midweek Memo podcast on your favorite podcasting platform. And when you do, you'll also be able to tune into our Market Wrap podcast that's every Friday. On that show, you're going to get a quick overview of the week in precious metals, along with conversation between yours truly and interesting people from the world of gold and silver, economics, and investing. So do that today. Thank you again, as always, for listening to the show. I really appreciate it. I say this every week, but it's true. I know there are all kinds of things vying for your attention, things that you can listen to. So it means a lot to me that you spend a little bit of time each week with me, and I thank you for that. I hope you have a fantastic rest of your week, and I will be back again to talk to you again next Wednesday.